It's Mark from Blunt House Technical Analysis. It is about 12:15 on Tuesday, February 10th. And I don't know what it is about the days that we decide to have these streams, but they seem to be, for some reason, uh, quite volatile. And it gets me kind of excited when that's going on before we come on to do these streams. So, a trader doesn't like anything more than volatility, right? So here we are looking at our Bitcoin chart, and then late last week we had this big candle. You guys remember this? This was on Friday. Everybody thought that it was Easter time, we were going to be reborn, and this thing was going to go straight back up to 125K. That's, there's your price chart. But what's really going on? What's really going on is we're still trending down. We still have resistance. We have a lot of work to do to go higher, and there are still targets to the downside that remain in play. So how do you manage all of this? Most of you just want to trade long. I understand that. Right? But if you're in a market like this, when your chart looks like this, and we're using Bitcoin, we're not picking on it, it's just is what it is. What are the opportunities to make long trades? Pretty slight, right? There's no real runners in there, that's for sure. But if you don't have a plan, this is the kind of market that will eat you up and spit you out, if it hasn't already. And what do I mean by that? Well, if you're in a position where you're only comfortable trading long and you want to be doing something with your time and the money's burning a hole in your pocket, chances are you're going to want to put it in play. And when you do, you have to understand that what you're doing is either entering long in a downtrend, or a period of consolidation, or another downtrend. Be honest with yourself what you see on your charts. And like it says in our title, don't get caught up in the group speak. The only thing that matters is what you do with your money on your chart. Everyone else can take a hike. Just worry about yourself. But if you don't have a plan, because for some reason you don't want to take this seriously, and that happens, it's just a home run derby. But if you don't have a plan, you're going to get eaten up. And that will be something that, if you don't break that habit, it will be your nemesis as long as you decide to do this. And if you guys know, I try to be pretty honest with you guys. I tell you why I do this, and a lot of the tools that I develop and methodologies have all been really based on my own experiences. Good, bad, and indifferent. And I spent a lot of time making mistakes, thinking that I knew something that somebody else didn't, or, you know the drill. And the reality is that we don't. And you need to put some structure around what you do. Because if you're not doing that, everything is just going to be a certain degree of chaos for you, right? And nobody wants that for you. The idea and the reason why we do these streams is to help you not become a victim of the market. We don't want you to be the person that got hit by something that you didn't see coming. And the only way that happens is to understand how price moves on a chart. Now, I understand that I have more gray hair and less of it than most of you. So I've been doing this a little longer. And I'm just sharing my experiences. Right? It's not financial advice. This is just my experiences and how they might be able to help you in yours. And sharing some of the things that I've learned over time. If you don't put structure around your trading, you're going to get killed. I was one of those people too. Which is why I'm kind of hell-bent on being very serious about entries and exits and when to enter and exit. This chart here is just the daily Bitcoin with a volume profile and our Blunt House TA signal script. That's it. It's giving us buy signals and sell signals based on certain parameters. Here's the choppy stuff. We don't want to trade chop, right? Things that are going sideways with not a lot of price action. Yeah. That's why you watch more than one ticker. So you don't have to wait for this to break out or break down. That's why we do this. And when you start to layer on what is a methodology, I'm just going to remove that for a minute. When you start to layer these things on, geez, it doesn't seem all that complicated anymore. What do we know? We know that current price looks for past, and we know that when you break one level, you find a next. And that phenomenon continues as long as until enough money comes in to change the trend. Simple or as complicated as you want to make it. Which means get out of your own head and just focus on what's on the chart. What we learned up here is that on a daily Bitcoin chart, we got a sell signal on this massive red candle from that was probably October 10th. Everybody's familiar with that day. But since that day, has the trend been down? Yes. It's essentially been nowhere but down. And as long as price is trading below these levels, why are you trying to go long? You buying a dip or something? What the hell are you doing? Doesn't make any sense to me. The trade was short until it invalidated itself. Notice the long trade, which was just what? A retracement. Higher in another downtrend. Did we know on the daily chart when that was about to transpire? Yeah. There's the print. Does price break trend on the way down, even with this little mild retracement, which is just a retracement in a downtrend? No. What do we know? We know as long as this is open, the trend is intact to the downside, and it is. Now you can take your trade when it shoots down in impulses, or you can wait till you get a cross, or maybe you've already taken your profit. That's all up to you. But in the process of current price revisiting past and breaking one level and find the next, and I understand that there's nothing on here to measure that right now, but we're just showing you the ebb and flow of price. Right? We only want to trade the breakouts and the breakdowns. Simple or as complicated as that. Are these breakouts or breakdowns? No, not really, are they? They're choppy. And you can see that there's a tight range there. You could argue that maybe there is a short there and a bit of a long here, sure. But I mean, those aren't the breakouts and the breakdowns. These are. So you have to have a little bit of discipline not to trade the chop. There's no reason to put money in play in this area, to trade. And if you thought you were going to accumulate in here because you thought price was going higher, well, then you were wrong. And you could tell that you were going to be wrong if you just extended your time frame. Because the weekly was telling you there's absolutely zero reason to go long at all. Unless it was a trade. But why would you be trying to trade long when all the massive extensions are down? It doesn't even make sense. So fractals is part of your process. Multiple time frames, right? And on those multiple time frames, the support and resistance will show up on other time frames. But what does this break one level, find the next look like? Well, it looks like this. Breaking or failing to break out of major moving averages in this case, which is just a point in time that's measuring price where it's been before. If we look at this move down, notice the divergence as you hit that major moving average. What does that tell you? That's momentum opening up. Hey, whether it be for 10, 15 candles like here or some massive downside moves, that divergence, when it opens up, approaching a major moving average, makes it very unlikely to hold because it's an expression of that momentum to the downside. So you know you were going to break one level. The question is, where's the next level? In this case, right on top of it. It's the 50. And we know how relevant, at least for me, the 50-day moving average is. Was this divergence open down to the right? Yep. Did you have real good, reasonable probability that it was going to fail? Yes. Fail to where? The next level down. And what does that look like? That's 1,000 days. Remember we talked about this way back here? If we don't find any support, we're going to find ourselves at 1,000 days. Here we are. And last week when we were talking about this candle, what did we talk about? And we show this all the time. This candle here has to break. Right? This is just a big candle that wicked the 5 EMA and pulled back. And look what followed. Nothing. You're not going anywhere. At least not yet. And was this divergence open down and to the right as you approach this major moving average? Yes. Which told you that it wasn't going to hold. Or at least the probability was slight. And can price break the T line, the 5 EMA, or the 1,000 day? No, it can't. That is not bearish or bullish. That is bearish. And ultimately, I believe what we're probably looking at here is our failed breakout scenario, where you come back and potentially take out those lows. The only thing that changes that is what? More money. And lots of it that moves quickly. To do what? To pull this up over these and start reversing this trend. But until that point in time, for me, I don't make long trades when price is below the T line or the 5 EMA. I just don't. Because the probability of, that long trade running is pretty slight. Unless it's a real reversal. But this is all part of a plan that everybody in this room should be using. Now, I've developed a trading journal. You guys know that. You guys in Telegram know that. If you want it, just tell me and I'll give it to you. It might be too much for some, but you don't have to use it all. But use enough to create some bad habits, some good habits. Right? That's what it's for. But how do we know, again, that we're sometimes on the right side or wrong side of something? This is our Z-score indicator. And what does it do? It talks about it's demonstrating relative strength. And you see all of this red up here, right? That's starting to fade. This is so this big red candle, this was a snapback. And we talk about snapbacks all the time. They're fun to trade, but they're usually short-lived. This is a great example of a massive snapback. So all of the relative strength left, and you got really extended to the downside. So you can see that this here is almost 3 standard deviations below the norm. And think of this as this extension down into this area and then up into this area. These are anomalies. Those are the extremes that we talk about. And when this money starts to come back in, then it snaps back. But it only was a snapback. It hasn't broken trend. Because here we are, right back to the 5 EMA and the T line. And if you notice back here, so we have this divergence, we can see where we're trading, all of that we know is bearish. And that's all price related. What the Z-score is giving us is relative strength. So what you're seeing here is not a representation of price. Okay, and that's one thing I want you to remember. That's not a representation of price. It is a representation of relative strength. And think of that as the interest in energy in the asset. That's essentially what you're measuring. And when you break or break above or below the zero level, well, that's typically bullish or bearish. So as you see here, the Z-score indicators start to break zero. That makes me feel more inclined that we are in the midst of what is going to turn out to be a failed breakout. Now, we could be wrong, right? That happens too. But I mean, this is not good when you break that level. And then it just helps us validate what we're doing from one time frame to the next. But is this always enough to create that kind of structure we're looking for? Not necessarily. And what I'm showing you here is something that's built into the signals indicator here on TrendSpider. So it gives us our first two fields, and this is what I use. You can change them if you want. A lot of traders use other EMA settings. That's fine. Do whatever you want. That's the benefit of doing this. It's the flexibility. We allow ourselves to determine whether we're using leverage or spot, and we have 3 take profit targets, a stop loss, a hard stop loss, and then a trailing stop. That's what we have built into it. So what does that allow us to do? Well, let's not clutter this for a second. This here is a short entry on Bitcoin at 92,750. There's our 4% stop loss, right? Didn't get hit. And if you don't want to use 4 or you want to use a tighter one, that's fine. You use whatever you want, but this gives you the flexibility to build your own plan. So here's your stop loss. You can see it on your chart. There's your first take profit, second take profit, third take profit. I don't want you to be worrying about what happens after this take profit level, because this is 30.50, and I think and it might even be 1 something in here. Yeah, 125. Right, so take profit at 30, take profit at 60, take profit at 125. So you could take 33%, 33%, and 33%. And stagger your way out. Or if you're an aggressive trader, you might see this trend, because that's the benefit of this system, and you can see where your take profit levels are. You might want to hang around. In fact, you might even want to add to this trade because you believe that there's more downside to go. But you have the ability to see this right on your chart. So, you know, if you're trading on an exchange or through a broker, even if you're not connected directly to the platform, you can set up on your chart exactly where your stops are going to be in those take profit levels. You'll see them. And through your platform, you can automate that. I do that on BYDFI. I'll have, just like you see here. This is the discipline you need to keep yourself out of the market's blender. While people are running around, selling, buying, creating total chaos, you have a system. There's your signal short. You can take it. There's your first take profit. There's your second, and there's your third. Now, if you're running a trailing stop, the odd time, maybe you'll get stopped out. That's fine. You understand the trend that you're in, and you can make an educated decision on whether or not you want to re-enter, and then if you do re-enter, where. And we often talk about this. So if for some reason you got knocked out here, you saw this candle, this doji candle, with the big wick on it, and this divergence still open, hey, maybe that's a re-entry candle. Sure enough, boom. But you are the master of your own domain. And as everyone else is worrying about the chop and the slingshot, you're just sticking to your plan. Stop loss, trailing stop if you want to use it. And that's built in here too, it'll show. And then your 3 take profit levels. This is your trailing stop level. And sometimes you're going to get stopped out, and that's all part of it. but so is locking in your profits. And there's going to be times, here's your buy signal, you hit 1 and 2, you didn't quite hit 3. And you may determine after a while that, hey, you know what, my third take profit level's kind of rich. Maybe I should back it off a bit. Or maybe I want to make my first level 20% and remove a little quickly. This is your strategy. We're just creating the tools for you to give the discipline you need to yourself. No one can hold your hand, right? You got to do this on your own. Another example in a downtrend, and you can now see it. Why selling long or buying long in here is not necessarily profitable. That's your money. This is your money. You probably would have got stopped out here, right? If you were using the trailer. And the trailer is just a safety mechanism. If you take the safety mechanism off, then hopefully you're adjusting your hard stop to lock in your profits. But the bottom line is you have to have discipline, or you're going to end up time and time again like a scrambled egg. And it doesn't matter what time frame you want to trade off of. So we have the same settings built into the script, shortened up the time frame, and you can see the stop loss level, first take profit, second take profit, third take profit. And you can see the chop and why you want to avoid it. You know, you're lucky in the chop if you're hitting your first take profit level, which is 30%. So that's reasonable, but you can see that the money is in the breakouts and the breakdowns.